use cases as well as adoption of blockchain. One of the important aspects about blockchain is in this space, we really have a lot of brains and ideas, and a lot of this energy gets channeled into real use cases and day-to-day usages. And today I'm going to be covering one of them. What is really important about blockchain is actually when you use it and you actually don't see it. But its primarily purpose, blockchain is actually a technology of trust. So blockchain allows you to conduct trusted operations in a digital environment and allows multiple parties coming together to share a business reality. Many people also sometimes refer to blockchain as the Internet of Value, as opposed to the traditional internet we have used for many years now. So what is really asset tokenization, even before real estate tokenization? Is really, we can take any assets that we have today in the real world. It could be real estate, could be valuable art objects, could be gold, diamonds, or other assets. And what we do is we do a digital representation of these assets, and we actually tokenize them. That really means the process of tokenization means that those assets need to be preserved in their original state, and the people will have ownership of these assets, not through the physical asset itself, but through the tokens, having the advantage of the whole blockchain functionality and ecosystem. But obviously, when we look at tokenization in real estate, there's some real unique challenges that are directly applicable to real estate itself. We have many cases of fraud and manipulation of things like title deeds or other entries, and we have seen that over many years. We have a very high entry level barrier, meaning that somebody wants to participate in a real estate project, you need to have either a down payment or a very big loan. And it's not always a very liquid asset, meaning if you want to sell and get some cash for a portion of the entirety of that real estate, it may take you several months or sometimes even years. And the transaction costs associated with it are extremely high as well, and many others. I just mentioned just a few that are extremely important. So here we're talking really about blockchain and real estate assets. So we are doing several projects in the Middle East region. Specifically, we have a regulated one that is in advanced stages in the Kingdom of Bahrain, and that's what you see there. Now, if we look at the traditional paper-based title deeds, which has been with us for many, many years, it is obviously can easily lead to fraud, or more than one person actually ended up owning the same piece of real estate, which has caused us substantial problems. So what we're really doing is digitizing this title deed, and this enables us to protect this title deed through cryptography, through a distributed ledger database. We can enable contracts, not just the traditional contracts that we may have through lawyers, but we have smart contracts. And obviously, the distributed network enables us to have a multitude or a variety of consensus mechanisms to achieve when transactions actually happen. So when you buy or sell tokens associated with that real estate, or when the property or the title deed gets finished. So what is really these capabilities? These capabilities have to do that in a traditional mechanism. We have a physical property and the associated title deeds. In blockchain environment, what we have is a digital representation of this property and the capability of breaking this big property into a lot of small tokens. And these tokens represent a percentage ownership, or what we sometimes refer to as a fractional ownership of this property. Meaning that when we have things like fractional ownership, we automatically solve already one of the initial problems of real estate, which is the high cost entry barrier level. So somebody can enter the market with little amounts, as little as $1, $10, $100, and so on. But real estate tokenization is much more than just the fractional ownership. One has to keep in mind that in real estate, value gets created in many ways. One, it's the value appreciation or depreciation of that real estate asset and the property in which it sits. but also the services that actually get conducted on this real estate. The building that you own may be monetized through something like digital signage or others. We may also have property management services. We may run a hotel, we may run or restaurants or other properties, and this will generate revenues. So that really means that when you own the fractional ownership of assets, you're also going to get some dividends associated with the operation of that real estate. So on one side, you have a capital appreciation of that real estate, and it's proportional to your ownership, but you also have regular dividends associated with the services that are performed and generate revenue associated with this real estate. So we need to have a really set of structured onboarding processes to enable this to actually see the day of light. So we have the property itself. We have to do things like due diligence to validate that the property is safe. There is no liens against the property, maybe loans that are hidden from the past. We have to capture the title deed, and then we can put the whole thing in an escrow account that is protected and wrapped by a smart contract. Once the actual property is owned and properly secured, then we can actually list this tokenized property on exchanges, and then people can go out and start purchasing, or even over time trading these tokens as well. But it's not just about the property itself, it's how we approach the customers which will acquire this property. So they have to open an account. We need to know who those customers are. So things like KYC and Know Your Customer, and AML stands for anti-money laundering. These are standards that must be complied with. They can pay by bank deposits, credit cards, or others, since the amount they may be buying is small. And then they can buy it on an exchange, and they have then the fractional ownership of this real estate. But I mentioned that there is other services around property management that can be monetized. And the way we do is we have a series of applications that are put together along with the property itself. This allows us to list the property, to lease services out of this property, to offer also things like, for example, maintenance services or others to rejuvenate or fix any problems that may be on the property. So you have not just the capability of fractional ownership, but also the capability of use funds or utility tokens to actually pay for some of these services, which generates another constant revenue stream as well for the owners. All this series of approaches towards real estate, asset tokenization, have different levels of maturity. So commercial real estate and cryptocurrency transactions have been adopted for quite some time. If you look at a place like, for example, Dubai, as far back as 3 years ago, you could buy a real estate property using cryptocurrencies. But when we talk about digital asset tokenization for real estate, there's many other important elements. You have to have title deed land registries, which can be also tokenized. And my previous friend covered this as part of his GBA presentation. We have the introduction of smart contracts and much more sophisticated due diligence. So all these various approaches to use of blockchain are today at various stages of maturity. But one key important element about all of this is obviously regulatory licensing. Not every place in the Middle East or around the world allows for this to be used or performed. So central authority organizations need to come along and have the necessary governance and regulations that ensure that the actual investors in this real estate get fully protected. So there is usually events that take place like a sandbox, which tries the regulations for a period of time, and then enables this to mature to a full licensing scheme. But one key element of all this operation is really auditing, because we want to make sure that the value of the assets that the investors are putting their faith in actually gets fully protected from beginning to end. And this is very important. So trust in the whole system. Because tokenization needs good quality data to be entered into the blockchain. Beyond just blockchain and tokenization, any kind of solution that deals with real estate asset tokenization is really an ecosystem of partnerships that enables this to function extremely well-oiled machine. So regulations is one of them, blockchain, banks and financial institutions, brokers, the service providers, and obviously trusted third-party auditors that validate to make sure that the transactions are conducted in a safe and trusted manner. But obviously, some challenges really remain. And these challenges have obviously to do with adoption. I already mentioned regulation needs to evolve. And although places like Bahrain have already gone ahead and not just have the sandbox, but also have full licensing capabilities, other places like Abu Dhabi are looking at regulation as well. But we need to go beyond just regulatory. We have many blockchains. So people still look at, for example, things like interoperability of blockchains as a big issue. So we need to have standards about blockchain and make sure that the various blockchains that we use can actually talk to each other and that they can easily interchange information. Some of the blockchains that we use have scalability problems, performance problems. They cannot perform enough transactions per second. So we need to be able to manage those challenges as well. Many new features in blockchain 2.0, 3.0 actually address a lot of these issues as well. And finally, I do think that audit and compliance is obviously a very key element to adoption as well, to make sure that we have a complete trust into the entire system. So if we look at the various issues associated with adoption, and we look at the maturity of the solutions that we have, we really can establish the timeline of what are the viable solutions that we can use today. For sure, tokenization of commercial real estate is one of them. Asset management of multi-large tenant properties, things like title deed registries and capability of searching properties online and being trusted that those properties actually exist. But in the areas of, for example, smart contracts, due diligence, and supply management for services, still a lot of evolution needs to take place so that all these services that go along with the ecosystem and the adoption grow to a proper maturity state. This is my short presentation that I had for you today. I do have a paper online on LinkedIn that describes in a few pages the elements associated with real estate asset tokenization. So I invite you to go on LinkedIn and read this paper in more detail. I can make obviously a copy of the presentation available. The Digital Week online will also have a recorded version of this YouTube session, and we continue the dialogue in cyber digital space. It has been a pleasure to be with you and looking forward to connecting and making this exciting solutions of real estate state tokenization advance in a safe, secure, and trusted manner.
Okay, George, nice to meet you here. I'm very my biggest respect to you as well. Yes, for your great presentation. Now we have to go forward. There is no time for question. I'm sorry. Yes.
No problem.
See
Next
you.
time. See you.
Okay. Sure. Sure.
Bye-bye.
Thanks a lot. Bye-bye.
Bye-bye.
Okay, we are on air, and our guest today is Lon Wang, CEO at Proximex, and he is a CTO of the New Paradigm. Lon, go ahead.
Yes, hi. Good evening, good morning, and good afternoon, everyone.
Yes.
It's morning here in Australia.
Yeah.
Today I'm going to talk about the new paradigm, the STO, the new paradigm that's going to take place and change the world in the years to come. And before I begin with that slides and presentation, I'd like to introduce a little bit about myself. My name is Lon Wong, and I'm the CEO of Proxima X. So basically, Proxima X is a platform. It's a platform that is an agglomeration of service layers that we have put together as a technology stack so that people can actually develop on that solution. And this technology stack has basically a few elements. One element is the blockchain, obviously, itself, the streaming component as well, super contract. We call it super contract because it's a variation of smart contracts. And finally, we have a storage element in this stack. So together, they become a technology stack for us to be able to develop solutions on top of it. So it gives us a multitude of variations where we can develop solutions on from financial technology right up to IoT, to storage of information, streaming of information, and so on. So this is what Proxima X is about. And what I'm about to share with you today is a solution that we have developed, and it's called EDLX, and it's based on STO, and how we have actually transformed or put together a solution for us. Yes, can you hear me?
Yes, sure. Yes, yeah. For sure. We're here. Everything is good. Don't worry.
All right. Okay. Because I hear background, someone is saying hello to me. All right. Anyway, so this is what I'm going to talk about today, the new paradigm. Okay. So let us take a step back. Yes, I'm presenting. Someone is talking to me.
No. You know, maybe on your devices, on some of your devices, something turned on. That's why you're listening. Here we are only now in Zoom. Nothing where.
All right, no worries.
Yeah.
So anyway, let's take a look at the background of how the STOs actually emerged from the days since 2013 to be exact. You know. In the beginning, we had coins like projects like Peercoin, Feathercoin, things like okay. Sorry, I've been hearing voices. Anyways, I hope I'm not deluded. So, in the early days, you have things like Feathercoin, Peercoin, and WorldCoin, Lucky Coin, and all those coins that came out as experiments. Those are basically experiments from the emergence of Bitcoin as a blockchain technology. This happened, in the 3 years following the launch of the Bitcoin blockchain technology. And come 2013, we had people talking about pre-mined coins. And with pre-mined coins are generated ahead of the project so that people could subscribe to it. And those coins were basically utility coins at the time. But fast forward to about 2016, 2017, these coins have morphed into what we call ICO, where people subscribe to these coins and it became some sort of an investment utility rather than a store of value for these coins. And this actually went out of control in 2017 when billions were raised. And eventually what happened was there was a cross between the ICO coins and the STO coins. And STO, as you all know today, security tokens, right? And that's when the jurisdiction started clamping down, and we had the USA coming out with the Howey test, which was a test of a precedent that happened in the 1940s, right? Of people selling securities as a result of a slight change in the way the securities were sold, but then nevertheless, they have been defined as a security, and therefore you can't sell openly in the public as a security. And that's when today, as we see, most coins are actually security tokens. And there's a fine line between store of value as well as something that is of utility versus whether the coin is a security or not. But unfortunately, if you really look at it, most coins are actually a security token. So that's the reality of it. And because of the very fact that many of these coins have been promoted as an investment coin rather than a store of value or a utility coin. And that's where the difference is. So if it's promoted as a security coin, then it fails the Harvey test, which means it is a security. So that's the background of STO and background of security tokens. So moving forward, what we have is that the security token is today obviously is blockchain powered, right? It can be offered globally, but there's a caveat here. Security tokens can be offered globally, but unfortunately, much of the restrictions happen in North America, and that's where it becomes an issue with a lot of offerings around the world where residents of North America are probably or cannot really participate in security token offering. Then we have another salient feature of the security token where it can be traded in cryptocurrency in certain jurisdictions. And it can be traded in multi-currency in all jurisdictions where the STO is an approved security token for trade or for offer. And the other thing is that it doesn't need clearing, it doesn't need settlement, it doesn't need brokers, it has no need for custodians because most things are on-chain. So, and the last thing is that it can be listed in multiple exchanges, like how a crypto token could be listed in multiple exchanges, provided that these exchanges adhere to some regulatory guidelines and framework where the tokens must have, the operators of these exchanges must have some sort of AML management, some sort of KYC management, as well as the investors' background and profile where they are approved for investments. So this is where the security token is as a novel way of public offering of securities. It's slightly different from the traditional stocks, but or securities, but basically they are different in a manner where the regulatory framework is adjusted to include security token offering on the blockchain powered platform. So moving on, we have a table here. I have a table here, but in particular is the bottom half of the table where it shows the difference between a public security where stocks are traded in traditional exchanges like NASDAQ or New York Stock Exchange or London Stock Exchange, where the security token has a very different way in distribution and in trading, where it requires no broker, it requires no clearinghouse, it requires no settlement system, and it has fractional ownership. And the cost of transaction obviously is lower, as well as the listing cost, plus the regulatory requirements are much less stringent, or it has some leeway in which these tokens are being offered to the public. So, and these are the things where, in the end, it shows that the security token has a much more propensity to grow and it has a very different approach to how traditional securities are being offered and traded in markets. And I think one of the key things that's happening around the world is that the traditional exchanges are not going to sit around and see what's happening to the security token markets. They have realized that the security token markets is one thing that is going to happen and going to change the world and change the way the traditional capital markets are going to be traded in the future, because security tokens, as I've highlighted earlier, is that they are much more progressive and much more basically much more efficient, because middlemen are all been taken out of the equation. And that's a $1 trillion industry that we're looking at that has been taken out of the equation. So if you look at the mainstream solution using DLT and blockchain companies using, again, DLT, you see that the mainstream have a lot of problems. You know, I've got two pictures here to show that there's a huge car there being transported or being added on with a plane that's trying to fly it. You know, it's not going to fly because it's clunky. It has a car body with an engine, and then you have an aircraft and an engine. You have two engines trying to make things fly. Whereas if you look at the blockchain solutions, you have basically an engine that has wings and is well designed to fly, right? So that's where the difference is. So the solutions in mainstream companies like NASDAQ or New York Stock Exchange or Australian Stock Exchange is that what they have done is that they are working on a Lego-like adding on solutions into their existing monolithic designs. And there are also rigid compliance based on traditional operating procedures and legal complications, too many value chain players. And this is where it is a showstopper when it comes to value chain players, because you have the security custodian, we have the central security depository, you have the settlement and clearing houses, and it's too disruptive to the entire industry. And if you look at the entire industry, it's not just an exchange or the security that's in question, that are in question, you know, is the entire ecosystem that have been thriving a bit on it for the last 400 years, right? And it's morphed itself into a huge monolithic industry where you can't pull them apart because a lot of players will be affected, and this is a multi-trillion-dollar industry. And what we are trying to achieve as a blockchain solution with STO is that we're getting rid of the settlement and clearing. We have no legacy, we have no brokers, we have no custodians, security custodians, we have no central security depository, because all this are actually on-chain, right? And this is where the challenge is for traditional markets, where they can't pull that apart and they can't do anything about it because it affects a lot of ecosystem players. If you look at what happened to the brokers in the years before this, like 25 years ago, you still can buy your security through brokers. Today, you don't need to buy through them. You just buy through the internet, right? And these brokers, the physical brokers and the broking houses, has reduced themselves more so into a internet-based sort of broking, where you do not need physical brokers to take your orders, right? So their roles have already been diminished, but they still play a big part in settlement and clearing today. But you don't need them to do any settlement and clearing. In fact, you don't need a settlement and clearing platform or institution to do any of those. So this is where is going to change the paradigm when it comes to STO, that bears a lot of resemblance. In fact, a lot of things that we can do with STO as opposed to what traditional stock markets or security markets are doing. So this is where we have something that is that is going to set to change the world. So if you look at what STO is about, basically you have three types of solutions out there. One is entirely smart contract driven. The other one is some sort of a smart contract driven with mostly embedded smarts in the DLT itself and a database driven exchange. And then you have the DEX, where it is entirely on-chain. But DEX has a solution, has a problem where high frequency trade is quite difficult. DEX means distributed exchange, where everything is online, on-chain, and that's where the problem is, right? So more likely, the model where it's totally smart contract or where it's semi-smart contract and embedded smarts in it, running alongside a database-driven exchange, something like what we see in crypto exchanges today is what's going to happen. And moving forward with that is how regulators will see it and how implementers will implement some sort of hybrid solutions. And as what Jorge has said earlier, there is a problem that we're going to have later on where we have interoperability as a major issue that has to be addressed by the industry, the blockchain STO industry. So these are the three models where I can see things are happening and how it will slowly evolve in the next few years. So the challenges that we have when it comes to...
Please, we have to finish. The time is over now. Yeah, just
okay.
Hit accelerator. Yeah.
All right. Okay. This is the last slide. So what we have is that the challenges we have looking ahead of is reputation of some of these STOs, because they are in the usually they are being promoted by emerging economies where they are less favored by the investment community. And then there is the multiple listing issues, as I've said, where there's a lack of cross integration. There's a need for central security depository, shareholder management, KYC, and then there is also control. There's the need for centrally managed control as well. So I think with that, I finish my presentation, and yeah.
Thank you, Leon. Thank you, Leon Wang. Yes, perfect presentation. Yes, we have to heard a lot of very interesting and helpful information for us. We have to go off now on air and move forward for the next speaker. Yes, nice to see you.
Okay, thank you. Thank you.
Okay,
bye.
Bye-bye.
Bye. Bye.